I'm going to put up a chart here, actually, because it goes to UK wage growth and its relationship to inflation, because this is something that Mr. Carney refers to almost every press conference. Are we really seeing it? And what it basically shows is that finally, the U.S., this is the rate of growth of wages is faster than inflation. How much of that does explain perhaps Mr. Haldane's decision?
Absolutely. The blue line here is very important. In some sense, it's quite interesting how the Bank of England is showing that they also put weight on the labor market, showing, as the blue line here is, some signs of wages going up. A little bit like the US, we're not quite there where we had a huge takeoff, but there's enough for the central bankers, and in particular the chief economist at the Bank of England here, to say, this is telling me that we got to do something.
How much re-rating do you think we need to see in the gilt market based on this?
Yeah, so one thing, of course, that's very important is that we have the whole Brexit thing simmering in the background. So they are stuck between looking at economics data, like the chart we're seeing here, and at the same time we have sort of this more structural issue where we don't know how much that will come in and how much that will be holding things down later on. But generally speaking, at least up to this point, more recently, it has been the Brexit issues that have been coming back. But here, nevertheless, the Bank of England is standing firm and saying, when we look at the economic data, we are now quite confident that, meaning the Bank of England, that we could even have the door open for a hike in August.
So what are they seeing in the economic data beyond the wage numbers we just looked at? Because the other economic data are sort of mixed, aren't they?
Absolutely. Manufacturing output.
Yeah, manufacturing.
But they just, as you just said, they just put weight on that this is all temporary. In some sense, the Bank of England is stuck between the Fed, that's full steam ahead, let's raise rates, and the ECB that just say, well, we're going to hold rates lower for even longer. So in some sense, the pendulum, the UK economy, ESB and Bank of England is trying to figure out, are they more associated with the US model of saying, let's go ahead, or do they want to stick a little bit behind and say, let's go a little bit slower like they do at the ECB?
What do you make of the forward guidance being changed, so QE will end around 1.5% rate hikes rather than 2%?
Yeah, that's very specific, and that's really breaking news. I mean, to say that we will only stop QE when we get to 1.5, that's very, very specific in terms of saying to the market, don't expect that we're going to have anything in terms of slowing down before we get to this level. So in that sense, they are really giving very clear guidance, and in some sense it's a little bit risky, because what if other conditions change? What if other things turn up, or for that matter turn down? I mean, how can they promise this so clearly? It's a little bit eye-opening, to be honest.